You have questions, we have answers. This is Jane Miller.
And this is Ken Miller. Welcome to our show, all about real estate with Ken and Jane. Today, we have as our special guests Joseph DiBernardo and James Napoli, both with the Nova Group. Guys, welcome to our show.
Welcome.
Thank you, Jane and Ken, for having us.
It's our pleasure. So before we get started talking about the third-party construction services you guys provide for commercial real estate, please give us your brief bios and your roles with Nova Group.
Absolutely. My name is Joseph DiBernardo, and I'm the Construction Services Group Director at Nova. I've been working here for roughly 10 years, and we're responsible for construction, environmental due diligence, and for our clients.
Okay, great.
Yeah, James Napoli. So I'm a professional engineer in New York and New Jersey, and I've been working with Joe for about 18 months now. I'm account manager and help him with a lot of his construction services, and also a structural engineer program manager for New York, New Jersey regulatory compliance work.
Okay, great. Thank you very much.
Fantastic.
So Nova Group is quite a big company. You guys are international. You have many subdivisions. So this first show, we're going to talk about specifically what you guys do, Joe, and that is third-party construction services for the commercial real estate industry. So to begin with, we should, for our listeners, again, we have a general listener audience, so not everyone's going to understand what that means, that you do third-party construction management services as opposed to. Can you explain what that entails?
Absolutely. So we work for lenders typically, and we provide services that they need during transactions for developers, owners, sponsors in construction-related work, rehabs, conversions within that commercial real estate industry. We provide our services to them.
Okay.
So you work for lenders, you mean only for lenders, or any other company can utilize your service too if not lender required, for example?
Good question. So in the commercial real estate industry, typically it's composed of not only, there's a variety of lenders, insurance cos, USDA lenders, CPACE lenders, private equity investors. And they're in that space facilitating funding for the borrowers in any transaction that we just talked about.
So as the third-party construction services, I think reading some of your information is you guys are like the eyes and ears for the lender. So your job is to ensure that the lender's money, that the construction progress correlates with what the lender's loan amount has been. So in other words, that if they're lending the money proportionally, you want to make sure that if 10% of the construction is done, that 10% of the money is loaned. You don't want the situation where 50% of the funding has been allocated, yet only 10% of the construction has been completed, if that's what I understand correctly, right? You're like the eyes and ears, you're the construction manager just for them, whereas the builder or the developer may have their own construction management company.
That's right, Ken. And we're essentially the eyes and the ears for the lender. Or the bank in that case, or the private investor that's involved with the project. We're the boots on the ground. We provide our construction assessment, construction risk assessment services throughout these projects. That's pre-construction, meaning if there's a loan about to close, and when the loan closes, we're doing the construction monitoring throughout the life of the loan.
Okay.
Oh, now I have a better idea. So you guys not doing the construction. You just check which every stage they done properly.
That's right.
Yeah.
So exactly. So we'll
Now I
provide
understand better.
construction risk services through either owner's rep, through a construction document and plan review, through budget reviews, maybe a GC capability evaluation.
That was my question. Do you guys get involved? I'm sorry to interrupt, but do you guys get involved then in interviewing and helping the lender ensure that the GC is qualified and responsible and responsive to do the job, or do you guys have like a big input in that in the interview process? Or
yeah, correct. We would offer those services where the bank can ask any question they want of the borrower, including questions about the GC. We would provide questionnaires to the GC, and we would get financial information, background information on the general contractor, I say GC, but they would then provide it to us, and we would kind of vet them out, try to understand if they're fit for the project. And if, where you're talking about a marine construction dock builder that's building a, multi-story high-rise, it's not a good fit. So you look at the history of the company, the work that they've completed, some of their financials, and you make a decision, or you help the bank make a decision on selecting, or just giving a thumbs up to the contractor that's involved with the project for the borrower.
Yeah, that's very interesting. We never really thought about that banks have. I know banks have, a lot of times in commercial transactions, banks have their own attorneys to review the documentation of, and it's, that's kind of like a piggyback of the buyer's attorney. The bank has their own attorney if the buyer is borrowing funds. So this is an important project that an important service you guys provide. What types of projects do you guys get involved in, like warehousing, all different types of commercial real estate?
Right. Well, as a national company, Nova does just about every asset type: multifamily, industrial, retail, hospitality, every asset type, small or large. So we could do it on like the SBL level, which is under $1 million sometimes, and up to several $100 million in size. So it's a full gamut. It's a complete array of assets. So
it's a lot of money. If a project is going to cost several $100 million, then I'm sure there's probably likely a joint venture of several funding sources possibly. So they want to make sure that that's a big investment. So they want to make sure their investment is protected and ensure that the job is built on time and in accordance with the funding given out.
Quality and everything has to be right. Yeah.
Yes.
And you had mentioned in the email there was you had one case study that you guys kind of came to the rescue on with a multifamily 7 properties. If you want to talk about that.
Yeah, absolutely. You come across all different types of projects. We do all kinds of services like we were talking about. But in this case, the borrower had requested a little help from the lender, and the property was what they call out of balance. That means when the budget is spent and not the work you were describing before, Ken, is not up to the percentage complete. So Nova came in and we spoke with the property manager and the lender to kind of get a handle on things. And what we found was there was a material issue between the property manager and the GC that needed to be proved. So in other words, we had to go to the site, and in a multifamily case for this multiple properties, 7 properties, had to go to every unit, and within the units, there's a certain scope. There's a business plan that says they have to do countertops, flooring, et cetera. We went through the units, unit by unit, and unit requirement by unit requirement in each unit, and imposed that on a spreadsheet, reduced the information, and got a snapshot in time of exactly what was completed during construction. So an unbiased opinion, third party, here we go again, of what is going on between the property manager and the GC. And we found that they were behind, but we took that information and we did our budget analysis on that for what we call a cost to complete. And the cost to complete will allow us to say, well, this is what it'll take to finish the job, which is slightly out of range from the original budget. And then we offered some solutions, additional construction monitoring, and additional work, just to keep an eye on things going forward. We provided our analysis to the lender, and we spoke with the property manager and the borrower and the GC, all the stakeholders on one call, and we're able to kind of realign 6 out of 7 properties, quite quickly, and it allowed us to provide a valuable service at the time that it was needed. Right.
And what was the reason? I mean, given that this job, like most jobs, have a construction management firm, what was their explanation as to why the project was behind the funding, or do they have any reconciliation or justification for it?
Well, the property managers, sometimes it's not as straightforward as having a GC that's in charge of a contract, and this was a CapEx expenditure, so it's a multifamily where they have hired sub contractors to do the work, and they would just what we were told is, and some of the questions I asked in the beginning is, well, did you have some kind of governance on this? And they had told us that the property manager had told the contractors to just go. So they just kind of didn't really manage them the way they should have, and that just had sorted and varied results that didn't align with the business plan. The borrower's still on the hook, to get everything completed, to turn over units, to get people back in the units, and to start collecting rent on these units.
I see. And
so things kind of fell behind in the placement of tenants within the units, and things just kind of got off track with the borrower. So we looked at a cost per unit that they originally started with, and came up with a cost per unit after we looked at everything, and there was a delta. That we had to go back to the bank and said, this is to get this back, within balance. This is what it's going to take. You can inject equity from the borrower, and there's different ways to remediate it.
I see. Yeah.
I think the main thing is somebody bias. That's really, because when everything work well. When something doesn't work well, so it's perceived to the other party, you are doing for best for you only. And then every party does that. So at the end, it's very crucial to have a third party, unbiased, come in, get involved. And also that person or company has to be very detailed and have a knowledge. And whatever the report or recommendation they make has to be spot on and have to be accurate, has to be a good solution. So that's very important,
right?
Especially in this situation.
Yeah. And there may not have been any ill intent by the project manager or the contractor, but they might have been working on things that, like you alluded to the fact they said go ahead, that go, but maybe their go method was constructing things that weren't in the critical path, and then that prevented them from getting to the finish line quicker. So you guys came in, you said, wait a minute, instead of doing this, you got to work on the counters all at once so that these units can all come closer to getting rented out. So
instead of doing 50 together, half and half, you mean more finish one, rent out, finish one, rent it out.
Yes.
Yeah,
so
or something that like analogous to that, like you said, or maybe concentrate on unit 1 out of 7 and get that one ready so it could be rented out before moving on to units 2, 3, et cetera.
Yeah.
Right, and these are not complicated issues. They just happen because of everybody has a motivation, and you're right. It's sometimes doesn't line up with the reality of resources. And
it could be that sometimes maybe the GC was trying to say, when he has a sub come in, he says, well, let's have the sub that's here while they're mobilized, let them work on all 7 units concurrently to save them money, but that doesn't help help unit 1 get to the finish line quicker because it's got to wait for the other units.
Exactly.
But just think about it, Ken. Think yourself, right? Yeah. If you have so many buildings, right, you want to get all the countertop done, and you want to do that. It's a safe, but it's not in the best interest of the bank to get the turn and.
That's right. They want to turn.
Right.
Yeah. So, all right. Why don't we take a short break? We'll be right back after these messages. Okay, welcome back to our show. So let's continue talking about the third-party construction real estate services you guys do. So we realized we were just concluding before the break how important this service is and how you guys helped with that 7 multifamily project to get the contractor back in track with the alignment of the lender to ensure that the units got completed and so they could be rented in a timely manner. Because sometimes it's important because sometimes the project manager there has a relation with the GC and they're looking at getting it done maybe cost effectively or efficiently, but sometimes it doesn't align with the finish line, right? So that's why you guys have to be the eyes and the ears for the lender. So that's really important. Do you guys have a project that you could share with us going on in Jersey or the tri-state area, like that you're currently providing this service for?
Sure. We have several projects we have many projects across the country. There's always those key projects you think about. But in New Jersey, we have a project in Jackson, and it's a pretty large project. It's multifamily. There's quite a few units. The lender is engaged to do basically just the borrower's requirement to reno units and turn them over. We have another project up north in the Alpine area, and it's an industrial project. So sometimes there's just tenant improvements that are made in that case, and there's basically, it could be as complicated or as simple as it needs to be. The acumen of the contractors and the parties involved can make it go smoother, or just be more involved and have our services kick in when they need more on-site services.
Okay. And speaking about on-site services, you guys typically provide it a daily basis, or are you there like on an as-needed basis or weekly?
That's a good question. Typically, with construction monitoring for loans or with equity providers, the equity providers would like more of a presence on a weekly basis sometimes, or a bi-weekly. And the construction loan monitoring within the debt world would typically be monthly and sometimes less than monthly. But what happens when you don't have a lot of monthly coverage and there's a gap in time is things get away from you. So it could be that, we make a recommendation that we do more monitoring on a monthly basis, generally monthly, but it could be up to weekly or bi-weekly.
Okay. And how are the loan funds dispersed? I guess you guys I guess the lender would probably turn to you guys if the borrower comes to them and says, "Hey, I need another $10 million for this project." They would probably look at the overall loan amount of, let's say it's a $50 million loan, and if they're asking for $10 million, they would say, "Well, are we 20% of the construction done, or what's the justification for it?" So I would think they would heavily rely on your firm as a third party eyes and ears for them to verify the funding is okay.
That's right. We make an unbiased recommendation based on the facts. So as you alluded to before, we look at the percent complete versus the percent requested, and the percent requested should be less than the percent completed. So it's always a little bit more that the progress is ahead of the funding request. We would make the recommendation based on being out at the site or having information provided to us in, let's say, a desktop situation where we'd review it with photos provided or information provided and make a recommendation based on that. And then we would in turn tell the lender, and then the lender would disperse the funds. We also have a service that's funds control with disbursements. On smaller SBA loans, a lot of lenders will come to us and say, "We want you to disperse the loans, the loan amount recommended or endorsed," whereby we have an account that's special for dispersing non-interest bearing type of account, and we would provide the money would be provided into that account, and we would, once we are okay with providing the funds, disperse it to the GC or the borrower for the required amounts.
Mm-hmm. And I guess you look a lot at the GC bills too, because it could be a little bit tricky. Like the cost could not correlate with the percentage done. Like, for example, the foundation, the footings might cost a lot of money, but if they're finished with that, they may have spent more than the proportionality of the percentage done. So I guess you guys have to look at the overall cost expenditure and verify it and say, well, if the total loan is $50 million, but they cost them a few million on the footings or the concrete work, for example, then you kind of have to. Yeah, so you really have to have the technical knowledge to understand the invoices and see if they're reasonable from what the contractor is billing for what's been completed.
That's right, Ken. So in our group, we have industry professionals in engineering, construction, architecture, and they understand building construction well. And when you're out on the site, you can get an approximate idea as to how much is actually completed. Is it framing? Are we at 10% of it? Are we 100% of it? And they're asking for 50% of it. What does it amount to? So yeah, we get the eyes on the work that's completed in the field and give our best possible opinion to help endorse the funds.
Mm-hmm. Yeah, that's yeah. And do you find that most lenders are doing this as a matter of protocol now? I mean, that it's kind of like a standard operating procedure to hire a third-party CRE firm to look out for them?
Yeah, good question. Not all lenders will do this, but there are, for example, lenders that will swear by this and just say, we're always going to have a third party go through all of the construction due diligence and provide their opinions for funding. And there are those who are like what we were talking about, SBA, SBL, small business lending, USDA, where they are required by the government to have a third party help with endorsing the funds. So there's a myriad of reasons. It's like having an appraisal on your residential home. You want to have due diligence. You want to have a third party come in with an unbiased opinion, and it's a nominal fee over the course of the entire cost of the loan or the construction project, whereby we provide these services and allow things to offer our professional services and allow things to run smoother.
Sure. And the bank or the equity firm is paying for your fee directly, or is that a cost that they build in back to the borrower? They charge
that's kind of along the lines of what we were just talking about with the an appraisal for residential. The borrower pays for it.
Okay, makes sense.
So the borrower pays the fees, the professional fees typically, but not always in an equity situation. It may be that we're hired from an equity investor and they just want our services for owner's representation, for example, and we'll provide our services weekly and they'll fund our services.
Mm-hmm. Right. And let's also talk about the plan review. We kind of jumped right into the being in the field, but you guys do much more than just the on-site field representation. You get involved in the project at the planning stages. If you want to talk about that.
Yeah. So pre-construction, prior to loan closing, that's probably one of the most important parts of the deal that we get involved with, whereby before closing, we'll have an opportunity. All the information's in. The drawings are 100%. We'll look at core documents, drawings, schedule, budget, and contracts. We were talking about them before. Sometimes we'll defer to legal if there's an edited standard contract. So that's an interesting type of thing. There's always different levels of contracts that are provided, but we look for standard forms. AIA, Architects Institute of America, has a lot of time-tested material. But regarding the construction document review, once we go through the core documents, and there's additional documents, there's always more voluminous information that's provided, permits, insurance, geotechnical report, environmental site assessment reports that are tied to the project. It's an out-of-ground construction project, for example, and they require all these different components that are provided to us, and we will encapsulate in a report and capture our opinions on all the different levels of completeness. Is it an executed contract? Are they completed drawings? Is the insurance appropriate for the size of the project? Is it bonded? These are all important questions before you dig a shovel into the ground.
The environmental too, like you mentioned.
Environmental, exactly. You talked about that previously on a different show.
Right, and you guys, we should mention, you guys have your own in-house environmental firm that provides all the services. So I'm sure you have the environmental experts right on your team as part of Nova Group that can effectively evaluate the site, look at the environmental reports, make sure that there's all the T's are crossed, the I's are dotted, and has a clean bill of health to dig the shovel.
That's right. Yeah, we have Peak Environmental, and we have other environmental professional colleagues that can do phase one assessments and then go into further areas if they needed to. For the most part, once we go through the construction document process, we then look at the budget. And the budget's the important component that will actually also reflect on all the other components. Is there a good scope together with the drawings? Do we have a contract that's complete, et cetera? And then we'll make a recommendation and we'll provide a variance from the original number. And then shortly thereafter, we'll find that the project's closing, and we'll go into the construction monitoring phase of the deal.
Oh, cool. Just for our listeners, we're out of time, but for our listeners out there, if you guys would please give your contact information in case any of our listeners need or work with lenders and they may want your third-party CRE services. So if you could please give the number to get in touch with you guys.
Joseph.DiBernardo@novagroupgbc.com, and my telephone number is 732-674-2288.
Okay, very good. We're out of time. Thank you guys so much for coming on our show. Hope everyone enjoyed it. We'll see you next week. Bye now.
Thank you.